Right. Hello, everybody. As David said, my name is Keith Miller. I'm a VAT partner at ASETS, based in the Northwest, but have responsibility for the north of England and also a national role. Heavily involved in VAT for 30 odd years. I know I don't look old enough on the photo or to believe that, but I started at Revenue Customs in the 90s, and I've been doing VAT ever since. So sort of quite a wide experience, and certainly in terms of catering, etc. I've got wide experience and been through the changes over the years. So I guess some of you, or most of you perhaps, will be familiar with how VAT has evolved in relation to food and drink over the years, and particularly the point that it can be quite a confusing and complicated area, and quite an area that's subject to lots of jokes. We're all over the Jaffa Cake jokes and everything around the seemingly nonsensical rulings that we've seen on food and drink. But hopefully for the next 20 odd minutes, I'm just going to go through the sort of the basics and what's changed over the years, particularly in relation to vending, and how it might still be of interest, and there's some opportunities still that might be pursued relating to changes that have happened in recent times. So without further ado, I shall move on to my first slide, just an brief introduction. So just to confirm the framework on which we work on around VAT. VAT is a consumer tax, and the basic rule is unless a relief can be applied to a supply of goods or services, VAT is chargeable at the standard rate, which is currently 20%, as I'm sure you all know, on the supply of goods and services within the UK. The main VAT issues, as I'm aware, for vending supplies is understanding the basic VAT position of the products that are sold through vending, the factors that might affect the VAT treatment. For example, where those goods are considered to be a supply of catering rather than just a supply of goods. And also an issue that's still with us, well, not an issue so much, it was an issue, perhaps an opportunity, are the changes around hospitality services that were brought in temporarily during the pandemic between July 2020 and March 2022. And the reason they're still an interesting topic, I'll explain towards the end of my presentation. So the basic treatment of products, food and drink products, is a pretty complicated area. I'm sure you may be aware of the numerous VAT tribunal cases that have been heard over the years, where Revenue and Customs have argued with the taxpayer over whether a particular food or drink item is vatable or non-vatable, and quite often the decisions that come out of these tribunal cases can be contrary to other cases that we've heard, and it's quite a bit of a mess, really, and it's all become a bit too overcomplicated. So that's the backdrop. But most products that are sold through vending machines, I guess, are probably more straightforward, hopefully. The starting point is food and drink is subject to VAT at the 0 rate, but as always with VAT, it's not as simple as that, because there are quite a number of exceptions to that, which make food and drink that would otherwise be 0 rated become standard rated, and there are even some exceptions to exceptions which make the food and drink 0 rated again, even though it's initially been considered not to be 0 rated because it comes under a sub exemption. It is 0 rated again, but won't get involved in the minutiae of that on this presentation, but just to illustrate how things can be complicated. So the products that are excluded from 0 rated that we know most about, I guess, and that are more relevant to most vending providers are potato crisps and snacks, chocolate and confectionery, hot drinks, bottled water, orange juice, carbonated drinks. alcoholic drinks, and the like. The list can go on, but they're the main categories, I guess, that are excluded from zero rated and are always subject to VAT at the standard rate. Then another factor to bear in mind that may change the liability of products, particularly those products that would normally be zero rated. If it's supplied to be taken away and eaten away from the premises on which it was supplied, the basic rules that we just talked about will apply. So the normal VAT rule will apply, whether it's zero rated or standard rated. So if it's not covered by an exception, it'll be VAT zero rated. And the example there, cold sandwiches, cakes, pastries, biscuits, but not with chocolate covering. We'll come on to that in a second. Fruit, again, the list can go on, but these are the main categories, I guess, that we're normally talking about. So these will be zero rated if they're supplied to be consumed away from the premises on which they're supplied. If they're excluded from being zero rated, it will still be standard rated even if consumed off-site. So that's the basic rule will apply. So either zero or standard rated, depending on what type of item is being sold, if they're taken away from the site. The thing to bear in mind, hot takeaway food is always standard rated, whether consumed on site or off-site. Well, sorry, I say hot takeaway food. I should clarify what that means. So that means food that is heated for the purposes of being consumed hot. So if it's hot just because it's been freshly baked, for example, that's not necessarily means it's going to be standard rated. It has to be held out for sale as hot food or kept hot or cooked hot to be consumed hot. There was a lot of litigation on this point a few years back. I was involved in it when I used to work for KPMG back in the day. Greggs was our client, and we were heavily involved in the litigation around that point. After which Revenue Customs clarified the legislation and the guidance on what is hot and what is not. So moving on to when that becomes catering, when the supply of food and drink becomes catering. So where it's supplied for consumption on the same premises on which it is supplied, it's considered to be catering by Revenue and Customs. And therefore, under the VAT legislation, catering is subject to VAT at the standard rate. It's considered to be a supply of services then. This applies whether the basic treatment of the food initially or normally, under normal circumstances, if supplied off-site, would be zero rated or standard rated. It will become standard rated as a supply of catering if supplied to be consumed on-site. So how this applies to vending, so when it's supplied for consumption on the same premises on which it's supplied, this is considered to be catering, of course, and subject to standard rate, as I've just said. Quite often this is obvious. For example, restaurants, that's always all output for restaurants, unless it's takeaway, of course. But if it's eaten in a restaurant, it's standard rated. Or quite often, whether food and drink is to be consumed on premises or off can be determined at the point of sale by simply asking the customer. We've all seen this, I guess we're all familiar with the process, whether you're asked whether you're going to consume on or whether it's to go. So that will determine, amongst other things, the VAT treatment of that supply. However, it's not so clear cut, obviously, for vending machines, unless and I could well be educated today on this point, but as far as I'm aware, I've never been asked whether I'm going to be eating or consuming the product there and then, or taking it away when I've bought something from a vending machine. I'm sure that's a possibility, theoretically at least. So when are they considered to be catering? So there's been a number of VAT tribunal and court cases down the years that have looked at the VAT treatment of catering and takeaway food. And as a result of this, Revenue Customs have published detailed guidance on what they consider, having considered all of the legal cases, what they consider to be premises in the context of determining whether food has been supplied for consumption on or off premises. So this guidance includes guidance on when supplies from vending machines were considered to be on site or off site, so whether standard rated as catering or not, or just subject to the normal rules. So so the guidance effectively says that for vending supplies to be considered to be catering, on the basis where food and drinks are intended to be consumed, the machine must be located in a place designated for food consumption. If not situated in a place designated for food consumption, the basic VAT rules apply to the food and drink that's supplied from the vending machine. So, for example, if the vending machine is in a canteen with a designated seating area for consumption, the supplies from the vending machines will be considered to be catering by revenue customs and subject to 20% VAT. That's unless there is some way of determining or evidencing that goods are to be consumed elsewhere. So again, I'm not sure. I mean, there is no specific means by which revenue customs will agree to that. So each case on its merits, I guess. And I've been involved with clients in the past where we've agreed like a percentage of items based on a representative sample, let's say, of when of the proportion of sales that are consumed on site or off. There's a number of different ways that can be done, but that's something to consider perhaps. So, but if a vending machine isn't in a place designated for consumption, for example, if it's in a corridor or just an outside space, obviously, where customers take food or drink away from the site, or even if they take it down the corridor to back to their rooms, to their desks, that's not considered to be catering, and the basic VAT rules will apply. Thing to bear in mind again is the supply of hot drinks and hot takeaway food is always considered to be a supply of catering and subject to VAT. Now, sort of overlapping all of that is the measures that came in July 2020 as a result of the pandemic. As a measure, I mean, it's essentially a measure to help the hospitality sector, not necessarily consumers. The VAT rate that applied to certain hospitality services, including the supply of catering, was reduced to 5% rather than 20% from July 2020 to I think it was September 2021. And then thereafter, until the end of March 2022, the rate was raised, but only to 12.5%. And then from April 2022, the rate converted back to the standard rate of 20%. At the time, revenue customs didn't expect taxpayers to reduce their prices necessarily and pass the VAT savings on to consumers, as I referred to before. But they saw the VAT rate change as a way of reducing costs for the hospitality sector that was being hit particularly hard at the time by the pandemic. So that's an interesting point that I think is important, and I'll mention further why that's important in a few minutes. So, as I mentioned before, the 5% rate was between July 2020 and September 21. So 12.5% between October and 31st of March 22, and 20% ever since. So how do you apply this to supplies from vending machines? Because the measure applied to the supply of catering, it also applies to vending machine supplies that are classed as catering. For example, hot food and drink, which is effectively considered to be catering wherever it's consumed, would have been affected by the change. So the reduced rate, 5% and 12.5%, should have been applied at the time. All of the food and drink that is supplied for consumption where supplied, and thus catering, would of course been subject to the reduced rate at the time. the 5% and 12.5%. So the important thing here to bear in mind, the latter category of food and drink that would that's classed as catering includes items that would normally be 20% of subject to 20% VAT, even if supplied for consumption off the premises, such as potato snacks, chocolate, confectionery, etc. So they were classed as catering. Well, if classed as catering, they would have come under the reduced rate rules at the time. Therefore, we found ourselves in an unusual situation whereby, under the application of those rules, if such products were supplied for consumption on site, they would be subject to the reduced rate in the applicable periods. But if supplied for consumption off site, they wouldn't be classed as catering, and normal rules would apply. Therefore, 20% would apply. Okay, so where does that lead us to? So ignoring the temporary reduced rate for 1 minute. Like I say, the supply of food and drink can be a bit of a minefield at the best of times, deciding what the liability is normally, and also deciding what the liability is, whether it's catering or not, on site or off site. Then mistakes can be made. VAT can be overpaid or underpaid, but quite often it's overpaid. VAT's paid when it shouldn't be. So you can make a claim where VAT's been overstated. And the way the rules work is that you have a 4-year period. So basically, a claim can be made for any VAT period on which a mistake has been made, i.e. VAT's been overpaid, as long as the end of that period is no more than 4 years ago. Okay, so this is the window of opportunity we're looking at now, I guess. So currently, VAT periods ending on 31st of October 2020 or thereafter are still currently in time, although VAT returns ending on 31st of October 2020 become out of time this Thursday, the 1st of November. So the 31st of October 2024, in other words, is the last date for disclosing an error in relation to VAT periods ending 31st of October 2020. So if you think there's an opportunity to reclaim VAT, it's important to act quickly so you don't fall foul of the 4-year cap. So that applies to any claim. So whether it's just a normal liability error that you've identified, or it's a claim under a claim to apply the reduced rate when it wasn't applied at the time. So because that the reduced rate was in between July 2020 and March 2022, there's still an opportunity for nearly all of that period to be claimed if an error has been identified. Now, what I would mention is that if a potential claim is identified and submitted, revenue customers have a defence that they often use, which is called unjust enrichment, which is basically to say that, okay, if in principle they agree that VAT has been overpaid, they will only refund it if you pay it back to the consumer. But that's on the basis that the consumer has borne the VAT. So it's been passed on to the consumer effectively, and the logic is, if it's been passed on to the customer and you're claiming it back, you need to pass it back to the consumer as well. So there'll be no benefit for yourselves as suppliers, but only to the consumer. And obviously, it'd be from in a vending scenario, it's impossible to identify who the consumer is anyway. But nonetheless, we think there's very strong arguments to rebut any such challenge. So we think a potential claim would be valid and sustainable as well. So that's all I plan to talk about today. I mean, as I mentioned before, I could literally talk all day about food and drink VAT issues and liabilities.
Yeah,
it's one of those areas. yeah, I think it'd be a good idea to stop me now. Yeah. So it's one of those areas that over the years it's just been a source of much ridicule and confusion. But
I have one question. I mean, we're talking about whether it's in a canteen or a corridor. But if there are items which would normally be 0 rated, like corn snacks or mini cheddars, for instance,
Yeah.
if they're in a canteen, so it may have come into the operator 0 rated, but they're going to have to charge VAT in it when they sell it out through the machine.
Well, that's an interesting point. Yeah, so it would work both ways. Arguably, if it's classed as a catering supply, it would be, it would be classed normally 20% VAT reduced rate during the relevant periods.
Yeah. But
So
if it's in corridors or goes back to the desks, then
just a normal VAT rate as though you're buying in a shop.
Yeah, it'll be 0 rated. Yeah, okay. Yeah, I mean, we had to step through all of this when the reduction came through.
I'm sure.
We did
yeah.
provide guidance, but this is more an opportunity for if people have any queries around those niceties, and whether they have 2 days to make a claim.
Well, it's only for that particular period. Obviously,
yes, obviously,
there's still lots of. That was just to illustrate how the 4-year cap worked, and it just coincides with if there's any VAT periods ending October 2020, they'll go out of date this week. But it's a rolling. The 4 years is a rolling period, so every month periods drop off the end. So it's worth, if there is a claim, then it's worth pursuing sooner rather than later because of that rule, especially around the reduced rate. But like I say, I mean, I'm sure it's something that was high on the agenda back in the day, because there was a lot of debate around it at the time as well.
Even now, we regularly get questions asking for clarity. Hopefully, again, people can re-listen to your presentation on our YouTube channel, but also they can contact you if they have any specific queries.
Well, absolutely, yeah.
Yeah, David, you have some questions?
Just 1 second. If you want to unmute yourself, Alex.
Hiya. Yeah, I just have Keith. Really good presentation. I just wanted to ask a question, maybe a silly one, but just for clarity. If we talk about a specific scenario like micro markets, right? And for argument's sake, the micro market is in the canteen, and people buy all the products from the micro market to consume it there. Then it's classed as catering. Is that correct?
Yeah.
Perfect. And then if we split it a bit between fresh food and ambient, so if we say fresh food, which is going to be consumed on site, then it's catering. It comes 0% VAT to us. Does the end user pay or doesn't pay VAT? It doesn't pay VAT, right? It has 0 VAT for the end user.
Well, if it's catering, no. If
0.
it's to take away, if it's not to be consumed on the premises, then no, it's 0 rated.
Perfect. And then on the ambient side, so crisps, snacks, drinks, all the above, if they're being consumed on site, again, this is catering. If it comes 20% VAT to us, does it need to be 20% VAT to the end user?
Well, it's there. You look at it separately, but it just happens to be 20% on both sides. Yes, it does, but it's not because you pay 20%, because obviously a lot of foodstuffs are 0 rate when you buy them in ingredients, and the content, the output could be subject to VAT. So it doesn't follow necessarily that the inputs match the outputs. But for the items that you just described there, you would pay 20% when you buy them in, and you'd charge 20% when you sell them on, whether
Amazing.
It's just as items or as in the course of catering.
Perfect. And then if the items come to us as 0 rated, so for example, everything that is baked will come 0 rated. So if it's I don't know, Doritos and they're baked, they come with 0 VAT. If I sell them on to the end user, again, same scenario, to be consumed in the canteen as a catering, is that going to be still 20%. 0 VAT to the end user?
It's 20% of his catering. Catering, it changes. The nature of supply, so to speak, changes if it's supplied on to be consumed on site. So rather than just selling a packet of Doritos to take away, which is 0 rated, if you sell it to eat on site, it becomes a supply of catering. effectively, which is subject to 20% VAT.
Perfect.
Well,
And
what
is
if
it-
it's so? What if it's a 24-hour operation and the canteen's shut? So people will come along, buy their Doritos, and take them back to their desk.
That would be zero rated.
Right.
You'd have to
So-
find some way. That's a good example, though. It's a good question because that sort of is the area that sort of we get involved in quite often. You know, where you have to end up negotiating with revenue and customs to say, look, you know, of all these sales, X percentage, or whether you can identify a cut-off point. If you know, in the example you gave, you say, well, the canteen's shut after this day, after this time, so any sales after that time have to be takeaway. Therefore, we can apply the zero rate. So whether you do it by identifying particular individual transactions at that level, or whether you agree a percentage with revenue and customs, they're amenable to that approach as well.
So sorry, and just one final question. I'll leave you alone, I promise.
That's fine.
That's all right.
So is it a fair statement that everything that you take from a micro market in a canteen, if you're taking it to consume it anywhere else, is zero rated, regardless if you've paid or didn't pay VAT initially on it?
Well, it's not automatically zero rated. You have to look at each item independently. So, for example, if it was a packet of potato crisps, sorry, it would be subject to VAT at 20% wherever you consumed it, because they're the basic VAT position is that they're subject to VAT. But if it was Doritos, because they're not potato, typical, this is where VAT gets silly. Essentially the same type of product, they're zero rated. And the mini cheddars, the example you gave before, likewise, you know, if they're just bought to take away and eat off site, then they're zero rated. Crisps, cans of Coke, etc., they're going to be 20% VAT.
Right, and then the food as well, if you take it away, it's going to stay at zero rated.
Yeah, if it's zero rated food, yeah. So biscuits,
Perfect.
unless they're covered, I told you I'd get the chocolate covering in. If they're not chocolate covered, then they're zero rated. If they're partially or wholly covered in chocolate, they become standard rated. Cakes, on the other hand, zero rated, wholly partly covered in chocolate, still zero rated.
Perfect. Thank you so much, Keith. Thank you.
That's okay.
So, Paul, you have a question. You can unmute yourself. Paul, you've raised your hand.
How's that? Okay.
Yeah.
Right. We were always informed that if we had a snap machine with items in it that were non-vatable, and it was on a corridor or wherever, so it wasn't in the canteen.
Yeah.
That even if we had non-vatable items in it, as soon as we put it in the machine, the total products were vatable because it was classed as a service. So we paid 20% on it. Is that true?
No, I'm not sure about that.
So
I can't see the logic in that.
So Keith, so you're saying that if we've got non-vatable items,
Yeah,
that in the machine, and whatever I sell them for, I shouldn't be declaring 20% VAT on that.
not unless they're sold to be consumed on site. If they're on site, then yes, because they change the nature of like. Sorry, go on.
If you're in an office, you're going to be consumed on site, aren't they? You're not taking them home somewhere. They're predominantly going to well, they'll be on a corridor, but they won't be in a canteen, so they won't be in a designated area.
Yeah.
So would that be classed as takeaway?
I would argue that they're not. Yeah.
Right. Oh, well, there's a nice.
Because it puts you on. Yeah. Well, because it puts you on a level playing field, doesn't it, with other providers?
Because we've been paying VAT on it total because we were informed it's a service. So we're
so I mean, to be honest, I'm saying yes, but depends on the nature of the property and how it's laid out. I've had clients where revenue and customs have come out to look at premises and take a view based on the sort of the economic reality is the phrase that they use. But in principle, if it's just there for not, there is no designated eating area, they shouldn't be applying VAT.
Right. Okay. Well, I'll investigate that then.
Okay.
Mm. Yeah.
And we have another question from Thomas. Thomas, if you want to unmute yourself.
Brilliant, thank you. Just a quick question. Obviously, a lot of this is dependent on whether the location is identified as a catering location or, for want of a better word, a retail location. Do the AVA have something like a checklist that operators can use to identify whether locations are catering or not? I imagine we've all probably gone off and done our own things, but as an industry, we probably should try to get to a point where if it has seats, if it has a microwave, if it has X, Y, and Z, to try and get a little bit of standardization. Do we have anything like that?
You can, well, the thing that we've always referred to in the past is, where are we? VF00D5160, accepted items, catering, secondary catering issues, vending machines, which is an HMRC document, and that does say quite specifically where machines are and whether they're deemed to be a catering area. Basically, if it's a canteen where people stop and sit down, but if it's, say, there's a poser chair and 2 stools, that isn't a catering area.
Yeah.
Brilliant. Yeah, just obviously just thinking of things like leisure sites where you may have seating that is there that is not for the purposes of catering, because obviously, use my own example, go to the children's swimming lessons, the seating is there for the benefit of the people, not for the benefit of the fact that there's a vending machine in the corner.
Mm-hmm.
But
I'd agree.
It's just whether there was anything like a checklist that someone who's maybe going out to do a site survey or what have you could do. But if there isn't a specific checklist, then obviously there isn't. It was just a question.
No, there is very good guidance. If you again go to the members area of the website and type in VAT on your search, it'll come up with that HMRC document and also the details of the VAT reduction. It's quite detailed. There's a number of pages which I think would be of use to you.
Brilliant, thank you.
And on that note, there are no further questions in the chat or any raised hands.
I thought that might be an interesting session. Thank you very much, Keith. Really appreciate that.
No problem. Okay. Do I?
And if you stop
Can I
sharing,
stand down now?
we shall
Okay.
move on. Thank you very much.
Okay, thanks. Bye.